to spot market trend. Identifying market trends involve analyzing price movements and using technical indicators to gauge direction, strength, and also momentum. Traders often combine multiple tools to validate signals and reduce the likelihood of false trend. Let's talk about primary methods for trend identification. Price action analysis. The most fundamental approach is observing price patterns on a chart. A bullish trend is typically characterized by a series of higher highs and higher lows, while a bearish trend is defined by lower highs and lower lows. Volume confirmation. Trading volume confirms the validity and strength of a price move. High volume accompanying a price rise indicates strong buying interest, whereas low volume during a price move may suggest a lack of conviction. Moving averages. You add moving averages to your chart, suddenly the cows start to make sense. Price begin to follow a smoother path. You notice that when price stays above the moving average, the market feels strong. Buyers also are in control. When it drops below, the tone changes, sellers start dominating. Then you refine your view. You add two lines, a 20 MA fast and responsive, 50 or 200 MA slower and more stable. When the fast line moves above the slow one, it's like momentum has shifted upward. When it crosses below, the market quietly turns bearish. You realize this is your foundation, the first step in reading trends. Ichimoku Cloud. Now you want more clarity, so you bring in the Ichimoku Cloud. At first, it looks complex, but then it starts telling a story. When price is above the cloud, everything feels clear like a bright sky. The trend is bullish. When price is below, it feels heavy, like a storm. The trend is bearish. The cloud doesn't just show direction, it shows confidence. If price is far above it, buyers are not just present, they are strong. Now you're no longer just seeing movement, you're seeing structure. RSI. Next, you ask yourself, okay, the trend is bullish, but how strong is it? That's when you look at RSI. When RSI move above 50, you feel the strength building. Buyers have the edge. When it drops below 50, sellers start taking control. But the real insight comes deeper. Around 60, 70, the market is pushing strongly upward. Around 30, 40, sellers are firmly in charge. You begin to understand RSI isn't about direction alone. It tells you the intensity behind the move. MACD. Now you want to catch changes earlier, not after the move, but as it begins. So you turn to MACD. You watch two lines move closer and then cross. When the MACD line crosses above the signal line, it's subtle but powerful. It's like the market whispering, momentum is turning bullish. When it crosses downward, you get the opposite message. The strength is fading. Sellers are stepping in. MACD becomes your tool for timing, for spotting the shift before it becomes obvious. ADX. At this point, you see trends forming, but a new question arises. Is this trend even strong enough to trade? That's when you check ADX. If ADX is above 25, the trend feels real strong, reliable, worth your attention. If it's below 20, the market feels dull, sideways, and also unpredictable. You learn something important here. Not every trend deserves your trade. Bollinger Bands. Now, let's talk about Bollinger Bands. Bollinger Bands helps you understand both volatility and also trend behavior. It consists of three lines: a middle line, which is a moving average, and two outer bands that expand and contract based on market volatility. When the market is calm, the bands become narrow, and when the market is volatile, the bands expand. In a bullish trend, price tends to stay near the upper band. This shows strong buying pressure and upward momentum. In a bearish trend, price stays near the lower band. This indicates strong selling pressure and downward movement. When price moves between the bands without direction, it usually means the market is ranging. Bollinger Bands also help identify potential reversals. If price touches the upper band and starts rejecting it, may indicate also a possible pullback. If price touches the lower band and bounces, it may indicate a possible upward move. Overall, Bollinger Bands help you understand how the market is behaving, whether it is trending or moving sideways, and how strong the momentum is. Now, don't make the mistake of using one indicator alone. A professional approach looks like this. Bullish confirmation. Price above moving average, price above Ichimoku Cloud. RSI above 50, MACD bullish crossover, ADX above 25. This is called confluence multiple confirmations. Bearish confirmation. Price below moving average, price below cloud, RSI below 50, MACD, bearish crossover, ADX strong. When these indicators align, you are not guessing anymore. You are trading with evidence.